Apple stock is looking good, really good. It doesn't seem to be strongly affected by high volatility due to macroeconomic uncertainties, such as inflation across the globe. Is that a reason why you invest in Apple stock? Well, in our video today, we will give you some secret Apple stock price risks you should consider before investing. Let's get right into it. Apple remains the Western world's favorite consumer technology company, with its products dominating the market space and its success at pivoting towards a software-driven growth narrative where it monetizes its extensive hardware install base with multiple subscription software services. If you had been brilliant enough to envision the impact of the iPhone on Apple's earnings and margins 10 years ago, you'd be very happy with your current rewards. Do the future rewards outweigh the risks? So far, the biggest threat to Apple stocks is its over-reliance on China. China is an important country for Apple. If you go through the company's Q2 results, which were released in April, you will see that revenue from the Greater China region accounted for 19% of the overall revenues, while the operating income in the region accounts for 27% of the overall operating income during the period. The company designs and sells most of its products in the US, but imports them from China after assembly. Virtually all iPhones are made by Foxconn's Han High Precision Industry Co. in Shenzhou, China, and by Pegatron at an assembly site near Shanghai. Apple's over-reliance on China is no longer its upside. In the past, the company has benefited from cheap labor and governmental support due to its close relations with China. Beijing's interference, however, is becoming a serious threat to Apple's activities. In 2020, the New York Times ran 2 stories that covered how exposed Apple is to China and how it could hurt businesses in the future. When China started to crack down on the tech sector, there was an uptick in the number of apps that were taken off Apple's App Store by the company. Apple has been making compromises in Beijing in order to be able to operate in the country. The company started storing the data of its Chinese customers and servers within China and let the state employees manage those servers, which could risk the data of Chinese customers. CEO Tim Cook, however, still stands by the decision that Apple's supply chain will continue to be centered in China. What do you think about this decision? Let us know your thoughts in the comment section down below. Apple is also faced with another issue of dependency, which may affect stocks. Shortly, we will be giving you more details. Another risk Apple faces is competition from other markets. Granted, Apple is one of the world's leading technological industries. However, the company must successfully manage frequent transitions of products and services. Timely and successful development and market acceptance are all factors that help manage the risks associated with production ramp. Global markets for the company's products and services are highly competitive and subject to rapid change. Although we are not facing any major issues yet as far as management is concerned, there can be no assurance that the company will successfully manage future introductions and transformation of products and services. As we proceed, it is important to note that this video is for informational purposes only. Ensure to make your research before making any investment decisions. Apple has stated that it relies on network carriers, wholesales, national and regional retailers, and value-added resellers to get its products to customers. Apple retail shops and wireless carriers may experience some level of conflict with Apple if the company does not renew Apple's agreements with these carriers. Some of its resellers may view Apple's investments in its own online and retail stores as conflicting with their business interest as distributors. Apple admits that this phenomenon might discourage these resellers from investing resources in the distribution and sale of Apple products, or might even decrease distribution altogether. As an investor, there is one key area you should look regardless of the type of stock or company. Shortly, we'll tell you what this is and what you can do to mitigate your risks as much as possible. So make sure to subscribe to this channel. We have more on stock news for you. Investors face one primary risk. The quality risk is also known as the value trap. Value traps are investments that appear sound but are in fact only going to cause financial distress. They can arise from cash flow issues, misleading revenue, etc. As an investor, it is never safe to over or underestimate stocks, especially when it is a highly volatile season. As Warren Buffett rightly said, risk comes from not knowing what you are doing. You can lose everything or you can gain everything. The volatility of the market and external pressures affect how stocks perform, particularly that of big companies like Apple. The best you can do as an investor is learn to predict the market and occasionally follow your intuition. Generally, Apple stocks have done well over time, and we cannot wait to see what more it has done for us. This is why we recommend you watch our video on Apple stock in 2030. Is it still worthy? Apple stock price position for more. Thanks for watching this video. will come your way next time.